Hello and welcome back. My name is Josh, and today I wanted to do a follow-up video to my video on IVR, Invesco Mortgage Capital, I believe it. You can see that video here. But I got another comment on there asking me to look into WMC or Western Asset Mortgage. Let me actually read the comment from that user. The comment was along the lines of. I'll paraphrase, but I know you said to avoid. However, I will be buying more because it crashed last year because of COVID, and once COVID is gone, it shall go back to normal. So this, again, if you'd watched the whole video about my last one, this is why with most businesses, yes, once COVID's gone, things should get back to normal. And we saw that with a lot of stocks. You know, if we look at, let's look at airlines. Sure. Actually, let's go to Expedia, which is obviously one that was hit by travel. And we look, we can see here, here we saw a massive drop, 55% because of COVID. And since then, it's already gone back to normal. Meanwhile, if we look at Western Asset, you can see here it's still down about 70%. And if we look at IVR, which was the other one I looked at, again, still down 78%. So why have other companies rebounded and this one not? And why should you not expect this company to rebound? And again, this gets back to the whole thing about complexity. You really want to understand what you're investing in. And you really got to understand what a mortgage REIT is. A mortgage REIT is basically all they do, this company, is they buy bonds. And these bonds are backed by mortgages. That's what a mortgage-backed security is. They basically buy bond, which is accumulation of thousands of different mortgages. They could be commercial mortgages, they could be residential mortgages, depends on the specific mortgage REIT that you're buying. But they buy these mortgages, and these mortgages are these bonds, and these bonds have a yield, which is based on the interest rate that people are paying on those mortgages. And so they get that's how they make their income. They bought a bond, and that bond pays a coupon, and they use that coupon to pay out shareholders as a dividend. A REIT by nature has to pay out 90% of their profits in the form of dividend. So why did we see this massive drop in price? So there's two reasons really. I really want to make this clear because again, this is why you should not expect this to get back to normal. So one, interest rates are lower. When interest rates go down, previous holdings so let's say you had an interest rate at 5%, a coupon paying 5%, and the interest rate was 3%. When interest rates go down to 1%, that actually makes the 5% coupon more attractive. So that should actually make this a better looking investment. So that is one thing that happens. So because there's now, instead of a 2% premium, you're getting a 4% premium. However, this is the big thing, when interest rates go down, people typically refinance their homes. So if you were paying 5%, I know I was doing this, I was paying 3.44%, and I refinanced, and now I'm paying about 1.44%. So again, just like how you gain that 2% edge, people say, I don't want to have my house paying at a high interest rate. I want to refinance at a lower rate. And because people have refinanced, that actually takes their mortgages out of this pool that pays. So again, a mortgage REIT owns a bond. The bond gets its payment from thousands of different people who pay their mortgage. Those people agreed to pay their mortgage at 5%. When they refinance, because they don't want to pay 5%, they want to pay 3%, they refinance their mortgage, and when you refinance, basically what you're doing is you're paying off your mortgage and getting a new mortgage at the lower interest rate. That then takes them out of the pool to pay. So in other words, people who used to be paying 5% because they refinance no longer are in this pool. So there are fewer people paying their mortgage because they're no longer in the pool. Not because they're no longer paying their mortgage, they're paying their mortgage, but they're not in this bond anymore because they refinanced. That is what book value shows. So again, if we look at, where is this? Here we go, price to book value. So this is book value per share. So this is how much basically they're making per share. And you can see it had a huge drop. And again, book value is basically how much in this case, it would be an understanding how many assets they have in these bonds. Why did it drop so much? The reason is because people are refinancing their homes, so they're no longer in this mortgage. And this is actually not unexpected. There's a great video. I'm going to link to it in the comment section below, but I would recommend checking this out if you're really interested in mortgage REITs. This one here, mortgage REIT investing, be careful. They pay high dividends, can plummet. And you can see here, they've seen multiple drawdowns of 57 to 66%. And another one that I thought was interesting is over the average dividend yield on mortgage REITs is 11.5%, but the average return is only 6.2. So why would the return be less than the dividend? Because the prices drop. This is normal to see. When interest rates go down, which they have historically, people have refinanced their homes en masse, and we saw a huge surge of people refinancing their homes. I actually wonder if I can pull up a stat here. Number of refis. And it says in 2021. Low mortgage rates contribute to a strong mortgage origination. So again, we've seen house prices increase. Here we go. This is refis. Look at how many people refinance their home early on, and that is a direct inverse correlation to the drop in the book price because people are paying off their home or refinancing their homes. So again, I would, and as you can see, the last time there's a major stock interest rate drop, lots of refis, and then it went back down to normal. So I really don't think that you should expect these mortgage REITs to bounce back to normal because, again, this is the thing I really want to stress. You need to understand the game you're playing. I understand tech. I really try to invest in tech. When you're investing in a finance company, make sure you're understanding why the stock dropped and really do your research. You really have to understand what's going on. And mortgage REITs are complex. Again, strongly recommend checking out this whole video. I'll link it in the section below. It's great. It really helps you understand the risks of mortgage REITs, how they're paid, and why I do not expect that this to get back to normal. I'm not saying it won't ever, but I really don't think that it's going to just bounce back. And the reason is because they are not selling a product, and so you think the product is going to go back up. Their product is a bond, and that bond is based on the assets in that bond, and those assets are homes that had financed previously, and when people refinance, it takes them out of there. So they're never coming back into that bond. So hopefully this helped explain. Again, if I were to invest in IVR or Western Asset Management, which is WMC, I think I would choose WMC. I think it looks slightly better priced, but I personally would avoid both. And if you really, really, really wanted, again, to mortgage REITs because of the high dividend, or if you're going to hold this for 20 years, maybe it makes sense because you're making, if you're a retiree and you want that 10% dividend, it can make sense. Just know that it might have future drawdowns. So again, it's what kind of investor are you? I personally am not looking for dividends. They're not as tax efficient because, if you get paid in a dividend, that then gets added to your income, and so then you get double tax basically. So when you sell the bond or sell the asset, you get taxed, but you also get taxed when you receive a dividend. So I personally don't like dividends. I want to compound my wealth in growth companies that are going to do well and can compound without any tax. Dividend, if you're a retiree or you need income today, it can make sense. So again, this isn't the right one for me. I'm not telling you what you should do, but just know the risk that this probably won't bounce back up and go up 4x, but it could be a good source of dividend if that's what you're interested in. So hopefully this was informative about mortgage REITs and helped you better understand the risks and complexities around this asset class. Thanks so much for watching, and let me know your thoughts in the comment section below. Do you invest in mortgage REITs? Are there any other companies you want me to look into? Thanks so much, and talk to you next time.